everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And this article out of CNBC says, Moody's warns a particularly large wave of junk bond defaults ahead. And as the article says, since 2009, the level of global non-financial companies rated as speculative or junk has surged by 58% to the highest proportion ever. Moody's warns that even though default rates are low now, future periods of stress will cause a particularly large wave of defaults. Debt for U.S. companies has surged 49% since the crisis, with many higher-rated firms using it to buy back shares and issue dividends. And we've been talking a lot in recent days about share buybacks. There's no doubt about that. And going forward in the article here, it says, with corporate debt hitting its highest levels since before the financial crisis, Moody's is warning that substantial trouble is ahead for junk bonds when the next downturn hits. The ratings agency said low interest rates and investor appetite for yield has pushed companies into issuing mounds of debt that offer comparatively low levels of protection for investors, while the near-term outlook for credit is benign. That won't be the case when economic conditions worsen. The prolonged environment of low growth and low interest rates has been a catalyst for striking changes in non-financial corporate credit quality, Maria Rosa Verde, Moody's senior credit officer, said in a report. And I quote, the record number of highly leveraged companies has set the stage for a particularly large wave of defaults when the next period of broader economic stress eventually arrives. Though the current default rate is just 3% for speculative grade credit, that has been predicated on favorable conditions that may not last. And the main point to remember from that article is that we haven't seen this since 2008. Who would have thought? We are repeating everything that happened before, except for the fact that it didn't really end in 2008. We have seen the continuation, and they're propping it up, vast centralization, vast manipulation of both monetary system and markets, vast amounts of debt, vast amounts of insanity. And the more they prop that dead horse up, the fatter it gets, the worse it's going to be when it falls over and crushes us all underneath. But we will bring you solutions later on in the video. It's not all to be worried about. But first, before we get into that, John, can you go into how this is going to affect us in the coming years?
Well, first of all, let's talk about the bozos that created this in the first place, the central bankers that, brought interest rates to zero or below zero. And of course, we done videos on where U.S. treasuries actually, I think it was Italian bonds that was yielding lower than U.S. treasuries. And we all know where Italy is on the verge of, which is bankruptcy, which actually, it makes sense because the U.S. should be on the verge of bankruptcy as well, because they're never going to pay down their debt ever in history until, of course, the Keynesians have printed themselves into oblivion. Now, it's interesting when they look at the numbers of speculative investment grade versus actual investment grade investments. As you can see, since 2008 here on the Moody's chart, you can actually see that in 2008 it was about almost 50-50, but then suddenly that diverged, and investment grade has just dropped down to 40%, and of course the junk slash speculative is now at 60. So you can see there's more and more bad debt that are out there because there's so much debt that have been issued that soon nobody could ever pay back. And of course that makes maybe 70 to 80% speculative, all the debt that have been created, because there's no way that we could print ourselves out of this next crisis.
Yeah, and let's also, when we're talking about junk bonds, we should also talk about the junk that is Moody's, because of course Moody's kind of undercuts the real problems that we are seeing just to kind of make themselves look good when the inevitable happens. Because of course the fundamentals are off the table due to the level of manipulation in the markets as well as the monetary system. So you can't put a date on a crash, but you know it's going to happen. So this isn't about fear mongering, folks. This is simply about giving you the educated approach to actually do something for yourself and be self-sustainable and solve the problems yourself, instead of depending on the banking system and the government to save you when they are hoping they're dependent on your dependence, and they want you in that place because it pushes you into perfect debt servitude, something they thrive on and something that sucks the blood out of you. And John, as we go forward, we are going to continue to see this vast manipulation. I mean, how long can this possibly go on for?
Well, what we've seen here now is, remember, we were starting to warn about the bond apocalypse a couple of years back. And I think this time it's very different because there's so much debt. It was mostly the stock market that really got hurt really badly back in 2008. But this time it's stocks and bonds and most of the other things, except for commodities, will win at the end of it because they still have something of value. The problem is, there's so much leverage, and of course you're talking about Moody's and of course S&P and other rating agencies that were rating AAA rating investments to put them into pension funds and so on. And we saw what happened in 2008 with the collateralized debt obligations. Now, of course, they've been most likely been doing the same. That's of course my educated opinion. I'm not going to say that they're doing it because I don't know factually. But from looking at their track record, it's most likely that they did this with the collateralized loan obligations, which is the corporate debt that we're talking about here. That is, of course, the same thing as collateralized debt obligations, which is for the private markets, but the collateralized loan obligations is the corporate debt that they package together. So it's just interesting to see how this is just bearing out. And now, of course, I think, as I said, 70 to 80% is just garbage debt out there, and we're gonna soon see it. I think we're gonna probably most likely see it within 5 years. It has to happen, because how much longer is this possible to just print money and print money and print money, and the public would just sit there and look like everything is fine?
Don't encourage them to prove you wrong, because they'll just keep trying to pump it and pump it and pump it until that balloon is the size of Earth and Earth lifts off into the sun.
Well, hey, if you're willing to have trillions upon trillions of dollar bills or electronic cash money slushing around, and your salary is like $10 trillion a year, that's up to you. But I would say, I wouldn't want trash to use that as medium of exchange. I would rather have something of value.
Well, we've had trash as a medium of exchange for a very long time, unfortunately, under legal tender laws enforced by the rule of a gun in the hands of the organized crime racket we call government. But, I mean, there's a huge issue coming forward, and, we have to look at the fact that there has been estimated around $100 trillion of derivative nonsense, insanity slushing around the world, and that's why it seems... A quadrillion, yeah. Way more than actually exists, obviously, as far as we know. There's a lot of hidden money out there.
Yeah, what if you had to actually count the derivatives into the money supply? We would have a hyperinflation instantly.
Make them do it penny by penny. But, there's a huge issue of the cashless society coming at us, and that, I feel, is a great example of the desperation that we're seeing within the system, where they know everything's coming down, and they know they have to come up with an idea real quick in order to save themselves and save their slave racket, really, and save the plantation, because in the end, this system is going to crash, and there's either going to be a renaissance of revolutionary action taken from the individual standpoint in order to take back an actual truly free market, or we're going to see the revival of it, and we'll continue to go in a circle for eternity. This time we have the internet, though, and the internet is pretty well established at this point on getting information out.
Yeah, and central banks will just end up owning everything. I think that's...
And then nothing.
Yeah, and then nothing. Exactly. That's if you look up that on Steam, you'll actually find my article on it. And that's what I believe the outcome will be if you let them just continue. Is they're just going to buy up everything. But then it's like, we're just living in a complete communist society now. What's the point? And then it'll collapse in on itself. So it's just the future that we need to get away from, because history is just written with 600 to 1,000, depends on the history books, what number you have, but that's how many times this type of a system has failed. And now we've just been extremely good at it with electronics, with computers and with ingenuity of creating these crazy derivatives and other things in order to just prop it up a little bit more, and it's still is not going to last that long in my point of view.
Yeah, absolutely. And the solutions that I talked about earlier on is that you as an individual must educate yourself on these issues. You know, it seems scary, but it's really not as complicated as it seems. It just seems really boring and it pushes people away. They're like, oh, I have to deal with all this bureaucratic nonsense and these numbers, and I did bad in math in school, whatever. Put that all aside. This is all coming down to centralization versus decentralization, and you as an individual being independent versus you as a collective being dependent on the state and the banking system. And it's really important that you look towards self-sustainable solutions like food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. And of course, gold, silver as wealth insurance. This is my opinion on investment advice because it's not even an investment, it's wealth insurance. You got to protect your purchasing power, folks, and protect your family with that. And of course, look to things that like cryptocurrencies that have sound fundamental value, something that has been tried and true, something that is innovative, something that is competitive, something that is revolutionary, and make sure to do your own due diligence on that because there's a lot of crap out there that you don't want to get into. And that comes down to you. I can't help all of you guys. I do my best to mention certain ideas and things and new innovations in the market, as does John, but there's only so much we can do for you. You have to do it yourself, and that's how all of us will get through this, is that, you know, you just stop being dependent on that system. You educate yourself first, then comes your ambition to actually do something about it, and with that ambition, you start to find new ways to solve these problems, and with that, you are able to take action and be the change you wish to see, instead of depend on those that are dependent on your dependence. Be as independent as humanly possible, folks, and rule yourself and decentralize everything. John, bottom line?
Well, history tells us that what Josh just went through is what is the best way to do things throughout calamity and throughout all these collapses in monetary system. So it's not even our opinion, it's actually just history telling us what to do.
Yeah, absolutely. So thanks for going into this with us, John. And until next time, stay tuned. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth. Be the change. Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized by YouTube as they bring in the ADL to flag all of our content as hate speech. Also check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also check us out at Steemit at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to check us out there and find us at Anarchapulco 2019. I know it's early, but this is such an exciting event coming up with Ron Paul, Judge Napolitano, David Icke, Larkin Rose, Jeff Berwick, you know, all the usual characters, and it's going to be amazing. So we hope to see you there. Make sure to check the link for Anarchapulco below and use promo code WHAM to save as much as 15% on your tickets. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
Wow.